In American society, money is a taboo topic. We're taught at a young age it's improper to talk about it, but we're also bombarded with messages about the power and importance of money in our everyday lives. And by not talking about it, we miss out on the skills and lessons we need to effectively understand and financially plan. That changes today. Welcome to Money Tales. Hosted by Sandy Brager and Cami Doder, Money Tales brings more than 35 years of combined professional experience in personal finance to demystify money and demonstrate what it's like to speak openly about personal financial matters. Join us each episode as they interview modern-day movers and shakers about how money decisions intertwine with their daily lives in order to give you better insight into productive financial conversations. Subscribe today and register for our blog Fathom at aspiriant.com/podcasts to increase your money mojo. And now, here's Cami and Sandy.
At age 8, Nancy Davis watched her mother make what she instinctively knew was a terrible financial decision, buying an excessive number of Persian carpets from a traveling merchant parked in a semi-truck on the side of the road. While most kids would have stayed quiet, Nancy spoke up. She not only convinced her mother that the purchase was reckless, she successfully negotiated a return of the carpets her family couldn't afford and didn't have room for. That early lesson in financial prudence would shape much that followed, from Nancy's decade at Goldman Sachs to founding her own investment firm, Quadratic Capital, in 2013. In this episode of Money Tales, we sit down with Nancy, who shares her unconventional journey from childhood financial watchdog to Wall Street entrepreneur. As you'll hear, Nancy's story reveals how early money awareness can translate into lifelong financial wisdom and business success. In addition to founding Quadratic Capital, Nancy is a portfolio manager for two of the firm's exchange-traded funds. Nancy has been the recipient of numerous industry recognitions, including Barron's inaugural list of the 100 most influential women in U.S. finance.
Here are 3 key money topics Nancy hits on in this conversation. First, how she applies the arbitrage mindset to find value in everyday life. Nancy describes herself as a professional convexity sniffer who looks for opportunities to get more value for less money. Second, how she advocates for delayed gratification over instant pleasures, allowing her to invest more money today for her future benefit. And third, how inflation risk is a critical blind spot in many people's investment strategy, but doesn't have to be. Now it's our pleasure to bring you Nancy Davis's Money Tales.
Welcome to the Money Tales podcast. I'm Cami Doder.
And I'm Sandy Brager. Cami, I was at a wedding recently, and in the chit-chat during the reception time after the ceremony, before the dinner, I was talking with some of the guests, and they found out what I did. And someone asked me, do you think it's appropriate for people to go into debt to pay for weddings?
Oh, that's an intense question.
It was.
Great question.
What I noticed is it kind of hit me in the gut, which was really interesting because my initial response was, well, no, why would anyone do that? Then I had to check myself and wonder, why was I having this physical reaction to the question? As I thought about it more out loud with my conversation partners, I said, this is a question of what the couple's goals are and what their values are and what they're trying to accomplish. While at first glance, it doesn't seem appropriate to go into debt at the beginning of your marriage to cover the cost of your wedding, depending upon your financial circumstances or that of your family, if they're making contributions or paying for it, and your goals, maybe it is okay.
It's so important, Sandy. You're right. It hit me in that same spot. I reacted to that, but it's not my values that we're talking about. It's someone else's. And I'm curious, was this just a casual conversation? Are they about to get married? Was this the couple that was getting married? I'm just curious.
It was a casual conversation. We were just talking about all the different types of weddings we've been at. This particular one was a destination wedding. It was stunning. It was a really, really beautiful wedding. The folks I was talking to, I don't think there was a wedding imminent on their end, but maybe something that they were thinking toward for their future.
It reminds me of when I was at my brother's wedding and I talked to that other couple that had been together 18 years. and they wanted to buy a beach house instead of getting married because of the investment. So it's their different values.
It is different values, and also thinking through timeline. If you are going to decide to go into debt to have this beautiful day the way you want it, how are you financing it? What is the total cost, not only of the hard dollars to cover the event, but also interest on whatever debt vehicle you're using to finance with?
So interesting. Thanks for sharing.
Not often do people ask me questions where I have this gut reaction of like, no. As I thought about it further, I realized different people make different decisions. So it's really up to the couple and what's most important to them.
That's great. Well, it's my pleasure to turn our conversation today to our guest. Welcome to the Money Tales podcast, Nancy Davis.
Hello.
Great to have you. Thanks for spending time with us today. Would you start us off with a brief introduction, and in that, share a couple pivotal moments that have taken place in your life that impacted who you are today?
So I'm Nancy Davis. I founded Quadratic Capital 12 and a half years ago in 2013. I love being an entrepreneur. It's definitely been a lifelong dream to create a company, create solutions for investors, and try to better the world in the way that I know how. Prior to starting my own firm, I spent the majority of my career at Goldman Sachs. I was there for about a decade, was on the proprietary trading desk where we managed Goldman's capital. And my style of investing with Quadratic is very similar to how we invested Goldman's capital. It was an internal allocation to make money for the firm and think about the world in a little bit of a different way, and happy to share that with your audience.
Thanks, Nancy. Great introduction. Would you tell us a little bit about your upbringing? Specifically, when you were young, when did money start having meaning to you?
My upbringing was very interesting. I was very aware of money from an early age. And I think that was because my mother in particular was a little bit reckless with money. I remember being worried about her buying things that I thought were not necessary and excessive, even as a young child, being worried. You only have so much income that you make from your career, and it's really your spending habits that are such a huge part of your financial freedom and investments. It's an interesting way to open up the show talking about, is it okay to go into debt for blank? Whatever that thing is, whether it's a car, a house, vacation, wedding, it's always a trade-off. Some people just have more risk tolerance than others. And I think I've always been in the camp of, if you can't afford it and it's not an investment, don't spend it. But that's my judgment, the way I was brought up. And it's probably from seeing the opposite, where I think I was 7 or 8. And I remember she bought all of these Persian carpets from one of those semi trucks that roll up, and they're selling them out of the semi truck. And she spent crazy amounts of money on these rugs. And I was 7 or 8 years old. I was like, Mom, what are you doing? We don't even have room for all these rugs. Why did you buy so many? And ended up talking her into returning them. And then imagine being a 7 or 8 year old trying to negotiate with basically a semi truck driving rug merchant company that's on the side of the road pitching these carpets. And I actually got them to take some back because she had overspent and was not being financially prudent. I did not know those words when I was 7 or 8 years old, but I did know this is excessive spending.
Nancy, how did you get present to that fact that it was excessive, that your mom couldn't afford that?
She was a teacher. She didn't have a ton of money, and she had just gotten a bunch of money from a legal thing, and she was just spending it like crazy. It's really a different mentality. Some people get money in their bank account or pocket, and they just want to spend it, and they'll buy pretty much anything, including more Persian carpets than they have floor space for. I, sad but true, was very aware from a young age that people can be reckless. It doesn't really matter what industry you're in, whether you're in finance or whether you're a teacher or whether you're a doctor, a bus driver, a waitress. At the end of the day, everybody has a certain amount of income and they want to have financial freedom and eventually one day retire. So going and spending all your money on whatever it is or taking on debt is, in my opinion, not something you should do lightly.
Nancy, you had this incredible wherewithal with money at such an early age. Tell us a little bit more as you got older. Were you an entrepreneur as a kid doing little odd jobs? How did you think about money as you were growing up then with this incredible experience?
I definitely didn't know what an entrepreneur was when I was growing up as a kid. So I had no idea what that was, but I was scrappy, entrepreneurial like things. I remember selling things, doing little odd jobs. Even when I was a college student, I saw that there was a need. I had an academic scholarship to go to college, which covered my tuition. But I quickly realized, I was like, wow, there's an arbitrage here, because if I live off campus, I have a nicer place to live and less money out the door. So it's nicer and cheaper. Go for it. And then the building that I moved into was all professionals, and a lot of them were older and without children. And we had this crazy big snowstorm one year, and everybody was stuck in their apartment. And being like a good person and trying to do the right thing, I kind of went around to people that I knew in the building and left little notes under their doors being like, hey, if you need some help or you want me to pick something up from the grocery store, let me know. I wasn't charging for that at all. I was just doing it to do the right thing. Some of the older couples that lived in the building or people who were by themselves without children, they would ask me to take them to a doctor's appointment or drive them places or help them do various things. I never had a price. Whatever people wanted to pay me was fine, but it was one of those entrepreneurial little things. But I think when you see that there's a need and you can do something to help people, that's where you have success in business.
Nancy, I think I'm still floored by your thinking about money as such a young person, even in college, to understand the idea of arbitrage, even if you didn't know that word at the time.
I did register that domain. I thought .net was going to be a big thing, so I owned arbitrage.net.
I love this.
How did you begin thinking this way? Did you take a class? Were you talking to people about money as you were growing up and getting into college so that you could make these very mature decisions about how to spend your money? Or was it all a reaction to watching your mother's money behaviors for most of your childhood?
I don't know. I feel like I need a couch to answer that one, Sandy. It's hard to know like where it all started, but I did receive a scholarship to college. My mother was not sending me checks in the mail, so I did have a job throughout school. And I think that was one of the reasons I got into investing even in college, because I wanted to go out to dinner with my friends and live that lifestyle, but I wasn't making that much. I think I started at $9 an hour and then got up to 12 at the end, but that's how I started trading options.
Trading options. I love it.
So all of this thinking about money was really just you responding to the environment you were in and trying to make the best decisions you could as a smart woman with the cash flow that you had access to.
The money multiplier. I was trying to make money with money. Somebody like my mother, who is, I would say, not financially literate at all and doesn't really think a lot about money. Those people see money as something you spend. For me, I think of money as something you invest and something that you use to create freedom, to kind of do things that you want later in life. For me, it's more of a delayed gratification than other people who, yes, a destination wedding is great, really fun, but maybe it's better to just do a small wedding and do it local so you're not taking on debt starting off your new life with your spouse. I would never do that, but no judgment.
You could take all that money you saved and invest it into something juicy together. I see what you're thinking.
There are different strokes for different folks, obviously, and you can't judge people on how they spend their money or when they take on debt or what their financial situation is. But I think I'm more conservative, maybe because I've seen what can happen without being financially prudent.
Nancy, you brought up arbitrage and have bought the domain. And I'm so interested to talk more about that.
It was in the 90s. I don't own it anymore.
That's all right. I love this because it's an idea that we don't talk much about. I wondered if this is something that you think about ongoing, like look for arbitrage opportunities in your life when you're making decisions, not just your investment strategy, but in your lifestyle.
I am a 100% professional convexity sniffer in all facets of my life.
Say more.
Can you give us some other examples of how you've utilized that strategy outside of business circumstances?
There are lots of examples, but one of them is maybe my lovely dress coat that I'm wearing today. It has a zipper. It's white.
It's gorgeous.
I bought this at Target in the clearance bin.
I love Target.
Probably the only person who's been on CNBC wearing something from Target. I think there's value in, to me, certain things like clothes. You don't ever need to, in my opinion, buy something full price unless you literally need it. You have to have it. It's raining on your head and you're freezing. I think you can find beautiful things that aren't necessarily brand name. And I happen to be a very small person, so it's a little big on me. I could get it tailored, but it's fine. Perfect for a warm day, but looking professional.
So Nancy, that makes me wonder, what are things in your life or experiences where you do feel comfortable spending a lot of money? Where are your values at from that perspective?
I did start a business. That was a huge risk financially and a huge investment. If you think about when you quit your job and you go from being paid to work to paying to work and then paying other people to work for you, I would say that's definitely not a frugal thing to do. But to me, it was a fabulous investment in my future. And going back to delayed gratification, I'd rather invest money, build a business, than spend the money and work for somebody else.
What an exciting time. Stepping away from Goldman Sachs, a really prestigious bank. What an incredible job you did there. And I love you wanted to own your destiny. Tell us more about starting a business. How do you even go about it?
I had never done it before. I reached out to a lot of mentors and anyone who would really talk to me about starting a business because I had not done it before. And you have to do a lot of things that you've never done when you start a company. There's a lot of learning experiences, a lot of mistakes, a lot of hearing what other people had done that were mistakes. So I could try to not make those same mistakes. And I think sometimes people say you have to work really, really hard, and 100% you have to work really, really hard. But sometimes you also have to know when what you're working on is not working and when to move on and when to say, this isn't something I'm going to do and I need to pivot and I need to change. So being flexible in your thinking is super important, and constantly trying to be a lifelong learner too, because when you start a company, you're doing a lot of things that you have no experience doing that are critical to your success with the business.
And how did you get yourself comfortable doing that initially? It's really hard when you've been working for somebody else for a long time. I feel like I know who you are based on how you shared how you think about money. So you're making this longer term investment, but that can be really hard in the moment, especially the first few times when you're doing that.
You have to have a lot of confidence. For me, I thought of it as really providing a solution. And I think whenever you start a business, you have to say, what is a problem I'm trying to solve? No matter if you're making widgets or you're doing technology or anything, I really saw it as a problem that I am fixing and something very tangible. And to me, that's a really good business model to kind of build everything on. Because at the end of the day, you need to be doing something that other people are not doing and doing something that helps people and betters, in my industry in finance, better client outcomes. That was the goal.
And at Quadratic Capital, what was the primary problem you were solving?
When I started my career at Goldman, that was when the Treasury first started issuing these things called TIPS, which are treasuries that are inflation-protected securities. And I remember being a young trader being like, this is so stupid. This doesn't make any sense. Because TIPS are long duration. So if you think inflation's going to higher, why would you want to lose money when interest rates move higher? Number one, so all TIPS are long duration. And number two, the big problem is it's resetting with one index. Why in the world would you use the consumer price index only to measure inflation? It sounds so obvious when you say it. And the Fed has been saying for years and years and years that they use survey data, they prefer PCE, they don't really use CPI. And inflation is such a challenging and difficult thing to manage. Why would you use just one index, which is CPI?
So you're using investments to work around that opportunity and create some returns on different measurements of inflation and taking advantage of the full time period covered by the tips. Is that correct?
We're trying to fix the issues with tips. So we take tips and then we do little options on top of it to try to solve those two issues, which is A, tips are long duration. So we have a way to actually profit when duration sells off, number one. Number two, we have another measure of inflation that we're adding, which is not linked to CPI. One of the challenges for me is that a lot of people think about if they want to add inflation, they look at what happened in the 70s and 80s. They're looking at gold or they're looking at oil or they look at cyclical equities or real estate because all those things existed in the 70s and 80s. The inflation protected bond market did not exist until the late 90s. And the interest rate derivatives markets, gosh, that's even newer, especially the options market. So it's a different lens to think about when you're thinking about inflation.
Thank you for bringing that to life for us. It does make me wonder, having now come off of a period of very high inflation being higher than it had been before that rise. Given what you do, how do you think about inflation in your personal life, in your personal finances? And I guess really what I'm asking is, as an entrepreneur with a company that puts forth investment strategies, how else are you diversifying your life beyond the investments that you're making through the business, broadly speaking?
In my opinion, everybody should have an allocation to inflation inside their financial portfolio. At the end of the day, we live in a real world, and we, meaning you, me, everybody, our parents, our siblings, everyone we know lives in a real world. And no matter what industry we're in, we have a certain amount of savings. Our goal is to outlive the savings. It's kind of a morbid way to think about it.
It's really important in the long-term plan. We're always looking at that.
You want to make sure that you don't have to change your quality of life or what prescription drugs you buy or what trips you take or what education you can give your children or grandchildren based on your ability to make that money last. And we all have the risk of higher inflation because what that means is your money does not go as far as you need it to cover your expenses. It's a risk that we all have. And if we are not adding inflation to our financial portfolio, we are actually short it in our real life. That's part of the thing that I try to educate people on, specifically in fixed income. Everybody out there in the institutional world, so I'm talking about defined contribution, the pension fund space, your 401k, your parents' 401ks, everybody is benchmarked to this one index, which is the core fixed income benchmark, the Bloomberg index, but it is the old index. And do you know how many inflation exposure it has?
Not very much.
None, yeah. Zero.
It had zero, none. It was created before TIPS even started. So there's no TIPS in the ag index. As you get closer to retirement, you have more bonds. You tend to have more fixed income than equities. And if you don't have an allocation to inflation protected bonds, you have no inflation protection in your bond portfolio. And that, going back to why I created the business and started this strategy, is to give investors a choice. What our strategies do is give you a way to actually reduce that short vol and buy volatility. And that's because we're long options.
It's really, really interesting. You've built this business that's successful. How do you measure success?
I never sit back and say, I'm done. Until everybody in the world owns IVOL, I'm not going to be sitting back and saying I'm successful. And I don't think that's going to happen realistically. So you're always trying to educate people. I think part of the problem in finance is there's a lot of jargon terms, a lot of groupthink out there, very little financial innovation. all investing involves risk, but here's a way to add inflation expectations outside of CPI. Here's a way to solve the duration problem of TIPS alone and actually profit when long-dated yields rise or when the Fed cuts rates more than expected, which is typically when something bad is happening, which is, in my opinion, why people own bonds.
Thank you for sharing the whole premise with us. It is really interesting. As you go to your own personal life, knowing that you have taken advantage through the money you have invested in your funds, managing through interest rate risk and inflation risk, as inflation has happened in your life, and we talked about the fact that inflation rates have been higher, they've gone down a bit, but it is a compounding thing. So when you go to the store, out to dinner, everything's more expensive. I'm just curious, have you had any challenges with inflation in your personal life, or knowing that you have that all hedged through your portfolio and you're taking advantage of it? Does it cause you to think about your personal spending differently than someone else might?
I'm very long inflation in my personal portfolio because of our funds and my business. The thing that's frustrating is a lot of people, when they think about, oh, I want to add inflation, they are like, oh, I'll buy oil, ... or I'll buy gold, or I'll buy real estate, or I'll buy cyclical equities. And so that's the challenge to say, look, the inflation markets did not exist back then. The TIPS market only started in the late 90s, and there are a lot of different ways to think about inflation and capturing inflation expectations. Inflation to me is not a trade. It's an asset allocation, because if you're not actively doing something about it, in your real life, you're actually short it.
It sounds like since you have this all covered, it hasn't really impacted your spending.
I definitely have had moments where I'm like, oh, maybe I'll go to this conference. Oh gosh, it's in Asia. And holy cow, look at the flight. No, I think I'll pass on that. It affects us all. Even my car payment for our insurance, cars depreciated by $8,000, yet our premium to insure less value of the car went up by 18%. No accidents, no reason. It was just the insurance company raised prices. I think all of us feel inflation in our daily lives. And that to me is, why do I want to do this podcast with you? I want to tell people there's so many ETFs out there. It's so confusing because there are thousands of them and people are being sold stuff all the time. And I want people to at least know about our fund. And that's why I want to do this stuff and put it out there.
Tell us, what's your next money conversation going to be, and who's it going to be with?
I don't normally strike out on saying, hey, let's talk about money. Not my go-to topic at most things, but I do believe in financial literacy. And I think it's super important, no matter what industry you're in, that you are financially aware and educated, no matter what job you have.
That's great, Nancy. Well, thank you for joining us on Money Tales. Before we let you go, where's the best place for our listeners to find you?
Our fund website is the easiest way. There's a contact us page. The listeners can go to www.IVOL. It's not eyeball like my eye, but it's I like inflation volatility, IVOL, ETF.com.
Nancy, thank you again for sharing your story and your passion around inflation and financial education with all of us on Money Tales.
Absolutely. Thanks for having me.
Thanks for listening to the Money Tales podcast. If you've enjoyed this episode, share it with someone you think would benefit from listening, and leave us a review on your favorite podcasting platform. Your ratings and reviews help more people find our podcast. If you're inspired to gain clarity and peace of mind about financial matters, don't hesitate to reach out to our team at Aspiriant. Go to aspiriant.com/start a dialogue. Or you can email Sandy and me at podcasts@aspiriant.com. See you next time.